another check on cybersecurity giant Palo Alto Networks. Those shares are higher, up about 5% right now after a strong beat, but off the best levels. That conference call kicking off in under a half an hour. Joining us now is Evercore Enterprise software research analyst Peter Levine. He has an outperform rating on the stock. Peter, it's great to have you on. Your thoughts on this print, which had better than expected quarterly results, but also it looks like stronger than expected guidance.
Yeah, absolutely. Thank you, Morgan, for having me back on. So, yeah, no, this was actually, I think, a really strong print for Palo Alto versus expectations. I think you called out earlier, you saw like Fortinet and Checkpoint have some softness, but the guide for fiscal 26, this is their fiscal year end. So the guide came well above expectations. Free cash flow margins, which is a metric everyone's been watching, actually was kind of guided above, call it 38% to 39%. So overall, like this was a very healthy print from Palo Alto.
Okay. What's driving it?
I think you're just seeing cyber demand I think cyber is still pretty resilient. I think the prints that we've seen earlier, I think were more idiosyncratic to some of the specific issues that these other vendors were having. But with Palo, you're seeing the geopolitical landscape, AI, the threat landscape's not changing, right? And cyber is still mission critical. And Palo is an enterprise brand. You can't replace it. You can't pause these digital transformations around security. And with AI and obviously the CyberArk deal, I think Palo is just well positioned to kind of help secure those AI workflows.
And I do want to get more into the CyberArk deal in just a moment here, but you lay it out like that, and I can't help but wonder why names like this the federal business would be considered a risk here if you're trying to become more efficient and more secure.
The federal business for Palo, it's less than 4 or 5%. So
okay.
They do. I would say Palo is probably one of the largest vendors within the federal government, but for them, it's low single digits. So I don't think it's that much of a risk. And for federal, it's again like you are seeing transformations going on within federal, and especially Palo's main business, which is networking. Like you're not going to rip out these firewalls. So for Palo, I still think they're best positioned and will continue to kind of outperform on the federal side.
Okay. So talk to me about CyberArk. Why is this deal misunderstood?
Yeah, for a couple of reasons. I think identity has become central to modern cyber attacks. So like deeper integration with identity data, I think stands to significantly, bolster, Palo Alto's platform. If you're thinking about, privileged access, what CyberArk does is they govern who has access to these models. And then once you're in, Palo essentially then governs what you can do. I think together you're taking the networking data, the cloud data, you have the endpoint data. So all these attributions, I think, combined together do tell a really powerful, story around securing AI. And again, with AI, the adoption trend continues. You're seeing more of these vulnerabilities being discovered. So I think them to combine with an identity asset, which they don't have, which now gives them the full platform, the full stack, I think does tell a pretty compelling story.